Hey everyone, Sean Maloney, Digital Business Masters. Hope you're well. Another DBM strategy call coming towards the end of July 2025. An amazing time to be alive. We've had an incredible week, a red letter week. And I think we're in for a red letter week this week as well, not just on the macro level, but also on the micro level. So we work at all levels, geopolitical, macro and micro. And what we've created in terms of our own little ecosystem that works inside the macro is coming together nicely. The projects move together. They don't work the way you want them to work, always. They're going to move at different paces. But the idea is that you've built a platform, and now your job is to consistently stick with the process so that you can fulfill what it is your goals are. Okay, so the micro is very important as well. We'll touch on the micro in part 2 of this call. You can access that through your Systems Plus subscription. First of all, though, let's look at the big picture and make sure that we connect the dots so that we can see how we're so successful in digital business. It's not just about what we do, it's about what the world does. We're not here to give you any financial advice, okay? We're here to give you financial education to the best of our ability in the digital space to operate balance sheets that accrue in equity that then allow you to reallocate those equities towards yields. That's the specialism of what DBM represents, has done for well over a decade, and we've done it in the form of an academy for the past 5 years. Why do we know this was important? Well, because many, many decades ago, we understood the need to stop chasing what most people do, which is to chase currency in the form of skill and time and convert that across to living, which is buying liabilities. We all need, obviously, things in our lives, and we want to do as much as we can in our lives. That's fine. So you're buying liabilities. Unfortunately, you're always going to be the case that you're not going to be able, unless you're earning over $100,000 a year, roughly, you're not going to be able to keep up with the deflationary effect, the purchasing power fall that happens within the fiat currency system. Once you understand that, then you understand you need to do something about it. And the only thing you need to do is convert some of that falling purchasing power currency into assets that appreciate in price terms at a higher rate than the devaluation of the currency. So you convert to cash flow, and then you use the cash flow in order to fund liabilities. And in part 2 of the call, when we talk about the blueprint, $1,000 plus per month blueprint, or the business plan that we've run very successfully for many years, I'll show you now how we're able to connect the confidence we have now from the macro and geopolitical arena that puts huge demand pressure on our balance sheet. In other words, our balance sheet becomes more valuable more quickly, which enables us to then move across and accelerate our yields as we get more and more maturity inside the micro projects, if you will. We work with big macro and we work with micro in terms of what we do as individuals. And we use that then to very, very easily create positive cash flow of at least $1,000 a month. Cash flow. Don't confuse that with income. Cash flow. Okay, so this is very important to understand. So we'll talk about that in part 2 of this call today. How do we create the overall framework on which to build what I've described? Well, obviously, we're using sound money. We're using now what's known as monetary energy. For the first time in human history, people are no longer working in silos locally or even on country levels with separate forex, separate currencies. People are now operating on one big monetary sound money. If someone does something in Australia or someone does something in Southeast Asia or North America or even in Europe, it affects our balance sheet. And on a finite supply with an infinite demand, you can see why we've been accumulating a global balance sheet for all these years. You can't do that in any other form of life. If you're doing that in an isolated business that's in a certain locality, or a property you have in a certain locality, which is what most people do when they're building up a store of value, a piece of land, yeah, then you're stuck in that locality. It's worth what it's worth to a very small number of people relatively. With a global interconnected balance sheet based on sound money, you're able to take advantage of global activities, which is exactly what we've done over the last decade, with an average CAGR of over 64%, just in Bitcoin. So that's the baseline on the left-hand side, the equity. But many years ago, we figured out that you can't run a long-term business just off a balance sheet. You also have to allocate a proportion of that balance sheet into added value, which in business, holistically, is called a profit and loss account. Yeah, this is where you're creating the cash flow. You're making more income than it costs you. Yeah. So we figured out that there's lots of companies in the world who are looking for liquidity. Not easy to do this, still isn't easy to do this. But as we've stuck at it for so long and we've selected the right partners and the right projects to go with as best we can, we've made more success than we have failures. You're always going to make failures, don't be under any illusions. But as long as you're more successful than you are at failing, you'll always be on the front foot. And we've done that with many companies, and we'll talk about that in part 2 as well, on the micro level, right? And then if you really want to get into it, there's a very sophisticated ways now that we create not just yield alone with USDC smart contracts, but we also have learned just in the last few years how to take ownership of what are called altcoins. So we're providing liquidity to companies that are looking to solve problems in the world, provide utility like all businesses do. So we own the actual underlying tokens, the coins themselves, which gives us the equity if you've got the skill and fortitude to hold on long enough and keep moving your assets. You can also see yield from these types of projects in the same project. So we're well used to managing equity with Bitcoin and reallocating to yield in all sorts of different ways, right? But what we also now understand is how to do that in one ecosystem. Yeah. So this is relatively new, the hardest part of the whole job for sure. But those who determine that they're going to get the skills and the support and keep moving with it, you'll always succeed, as long as you're working with the right companies, of course. So how do we make sure that everybody gets looked after? Well, we figured out many years ago that we need some sort of system so that people can go through the 5 steps to what it takes to be successful. You start with mindset, which is the hardest bit, of course, because most people want everything for nothing. Yeah, they want everything quick and easy. They don't want to put any effort in whatsoever in many cases, which is unfortunate. But you've got to get that mindset overcome, and you've got to make sure you're working continually towards your goal, just like if you were trying to get fit in a gym. Just think of it like that, yeah? Then you need the skills. You must have the skills in order for you to be able to have the confidence to apply into the systems, which is where what I've just been talking about actually happens in the case of stock to flow and the movement of funds and everything else, which creates the income. And then, and only then, are you able to master what it takes to sustain your income, otherwise known as wealth. So there's a process to go through. Hence, we've devised what is a neat system of subscriptions, and you move up the channels. Quick heads up for those of you who are existing skills people. You'll need to upgrade to $25 a month very shortly now, because we're just about to launch what we're calling the Master Program, which is a full 12-month program that takes you through from cradle to grave everything I've just been talking about and all the steps involved over a nice, neat 12-month process. Okay, so it's very important. So it's very important indeed to make sure you're in position for that. Okay, so that you're not missing out and you're keeping up with this next phase, especially as we connect the micro activities that we do day to day with the big macro information I'm just about to share with you. All right. So before we get into the updates for this week, or the last week we've just had, let's just remind everybody of what it is to look at this in one visual. It's all about understanding where we've been, taking a sense check on where we are, which is around here now, around $123,000 in terms of Bitcoin. And then you take a trajectory on where you expect to go. So you can't take a trajectory if you're only looking at where you are today. You've got to look at where we've been and take a trajectory. Okay, it's very, very possible in this world to create the future, obviously. It's impossible to predict the future, but it's very, very possible to create the future. And rather than letting other people take over the creation of your future, bosses, banks, and governments, all we've done is learn how to take responsibility for creating our own future using bosses, banks, and governments instead of them using us. And that's become very, very apparent just in this last few months in the way that this is shaking out. And it's very clear now that we've been through what's called Crypto Week in the US, because it's very clear. If you read the small print of the Genius Act, for example, it's very clear that people in the bosses, banks, and governments realm, the traditional, globalists, the people who run the show, they're definitely going to maintain control. There's no question about it. But in terms of what we are able to take advantage of around the edges while they're making this transition, as long as you understand what's going on in the core, you can take full advantage that will set you up for the rest of your life because of the nature of us now appreciating what it is to be the center of the money supply. Yeah, very, very sophisticated, but it's important to understand. And this graph just tells you that story in one visual. All we did was appreciate that this may have an opportunity. This may be something we can do back a decade ago. And we've held on and held on and held on despite all the challenges to a point in time in 2025 whereby we're able now to front run what a lot of people still don't understand. Hence, we're so passionate about what we do, and hence we set the Academy up, because all we've really done is hold on to monetary energy, sound money, whether it's Bitcoin or gold, for long enough for that to create a big enough effect on our balance sheet, what's called a critical mass, for us to then to be able to reallocate that in many, many sophisticated ways that are now not just being driven by DeFi, but also TradFi. And we don't need bosses, banks, and governments to do that. Whereas historically, you've had to have financial advisors and institutions and pension plans and savings accounts and bosses in order to access some peripheral edge of income in the form of currency. Those days have now finished, literally just finished this week. So those of you ahead of this, congratulations. For those of you who are listening to this and thinking this is, too much to absorb, welcome to the party. And now your job is to move through the processes. And as I say, that's best done by working with your mindset and skills first, which is why we've just set up the master program to help people go through it in a staged process over 12 months, because that's at least what it takes to understand and let alone apply what I've just said. Okay, so no pipe dreams around here. This is happening in real time and it's changing lives. So, like I say, in order to understand how we apply the realization and the education, you've got to understand the big pictures above the canopy. You need to appreciate what's going on in geopolitics and macroeconomics in order for you to make the right decisions in the right time in your micro life. Yeah, in the small business that you run and we run inside this much bigger world, all interconnected on global energy, I might add. So it manifests itself very clearly because companies like Vanguard and BlackRock and Fidelity, etc., yeah, these are the big institutions I'm talking about. These are the people who run the world, really, not politicians, not big companies. It's the big banks. Everybody knows it, yeah? And we've known it for a long time, certainly since 1971. So then you can take, visuals, get into what I'm calling the small print a little bit, because we can untangle what we've been through in the past week with the crypto week that we had in the US. And we'll touch more in the political section. But it's important to realize that it doesn't really matter anymore. It used to, but it doesn't really matter anymore too much that there's brinkmanship going on between traditional finance, the Vanguards and the BlackRocks, and what's going on with the new wave of decentralized finance type companies, your Coinbases, etc. I know officially they're all centralized, but there's a difference going on, okay? And it manifests itself with what Vanguard are doing specifically. Vanguard are providing access to Bitcoin indirectly through Strategy, which is a private company, yeah, you may have heard of through Mike Saylor. They're providing access to Joe Sixpack and ordinary people to Bitcoin through the strategy product, but they still are not yet offering Bitcoin directly to the same customers. Now, that says everything you need to know about what I'll keep repeating in this session today, where you've got this standoff going on that has been formalized. The standoff's been there for many years, but it's been formalized as of this week, because now you've got absolute regulation and awareness and written down policy that is allowing the traditional DeFi companies to now take on the traditional TradFi companies. And it's fascinating to watch. Yeah, either way, it brings in liquidity, which is fundamentally underpinning the baseline monetary energy fundamental of our balance sheets, known as Bitcoin, yeah, and possibly some other altcoins now as well. So we win anyway, because we're plugged in and front running this whole shift, right? So we're living in extraordinary times, and it's now really important that we focus, because this, if there was ever a time, we've all done this over the last decade, many of us, we've been constantly doubling down, constantly focused, constantly dollar cost averaging, constantly finding confidence in our decision making. But now we don't need to find it anymore, because it's right there in front of us. It's just facing us, because we're so astute, so much more educated and aware than the average person who is still thinking they need to chase currency. All right. So this gets very, very detailed, but it's important to stress this point that there's more going on to this than meets the eye. All right. So the Federal Reserve and the US regulators issued a statement just last week, all following in tandem with the crypto week and the political angle of what the US is doing. The Federal Reserve and the US regulators, which are supposedly independent, they stepped in during the same week to say that they are now allowing, look at the terminology they're using. They're very, very arrogant. They're allowing the banks to custody Bitcoin and crypto. Yeah, we reported on that last week. Now, that's arguably the most bullish development in the whole history of Bitcoin, for obvious reasons, because it's a massive liquidity signal to every legacy institution, pension fund, endowment, insurance company, that they can now get on with green lighting to onboard Bitcoin exposure via trusted legacy rails. Think about that. Now, the price of Bitcoin over the past 7 or 8 months, from 78,000 to 123, is that being priced in? We knew about this late last year, and now it's being priced in, and now we can go to the next legs, which is what I'm saying, that as these banks realize they can't fight it, they're going to have to absorb it. They're going to want their cake. They know that most people aren't educated enough or sophisticated enough to do what you guys do, which is to go and become self-sovereign and build this on your own balance sheet and your own micro business. They know the vast majority of people are going to just follow the same lead as they've done with fiat for all their lives. Now, people are going to pay for that in some way, shape, or form by giving custody over to others, or giving the ability for others to take slices of fees. We know that, right? But for us who are self-custody, it just creates a massive accelerator in how we can get to a point in time where we've got critical mass to live the rest of our days from and pass on to our legacy, which is crucially important, okay? So these are big messages, much more than strategy. This is about looking at the fundamentals of what is nothing less than the biggest revolution in monetary policy and management we've seen since 1971. That's what's actually happening in 2025. Okay, it's very, very big. But you've got to get down to the small print as well. All right. Now, it's not a big deal. This, a few years ago, this would have been very agitating to us because there wasn't any balance to the discussion. But now there is that balance because of what's happened in the last few days with the Genius Act. We're now looking at the stablecoin issuers in the small print. All right. So what you need to understand, and we're still obviously taking on board ourselves, is that stablecoin issuers can only issue stablecoins under the Act unless they are a chartered bank. Now, the devil's in the detail with that, right? Because the chartered banks, the banks that are written, many of them have been around for hundreds of years. A lot of them came from, all sorts of shenanigans over the decades and the centuries. they're chartered, right? So they get all the rights and privileges, which is why the banking system is the way it is. The new kids on the block, the likes of Coinbase, etc., right? They're not chartered. So they're only going to be able to issue the stable coins, not create what they want, which are much broader services to yield from stable coins and offer on-chain wealth tools, right? Banks, chartered banks offer wealth tools, right? You give them your money, and they will give you some pittance in interest, and then go and spend out, $9 in every 10 for their own purposes. Yeah, fractional reserve lending. Now, the Coinbases of this world, they want that same thing. But clearly, the vanguards, etc., as I said at the top, they're not going to give up that easily. So you've got this standoff going on. But if you stand high enough in the canopy, you realize that it's not such a big deal as it used to be, because it just means that there's liquidity coming from all directions, which is only going to go to one place, which is the core sound money tool of Bitcoin. All right. So it's an interesting one now. We can relax to some degree, but we are going to observe now in the small print lots of nuance that you wouldn't necessarily pick up on unless you were studying it, which is why we do these calls. The average person on the street are not even going to understand anything I've just said, and I'm just going to get what they're given, right? And we'll talk about how that is a challenge when you're looking at CBDCs, which is the other angle of the same result of this, right? The other thing is we've picked up on that foreign issuers won't be able, or foreign banks outside of the US won't be able to do anything unless the US approved, right? So there's a ban in place for foreign banks to be operating in this manner for at least 3 years unless they're approved. So it's those approval mechanisms that we'll watch very closely. But like I say, either way, it doesn't really matter, because the liquidity coming in isn't just coming from the big banks, it's coming from the insurance companies, the pension funds, the legacy institutions. So we're on for a real ride here, which is why we're very confident about the $200,000 price point of Bitcoin by the end of this calendar year. Yeah. And for us at a micro level, that's good enough. That's good enough until the next time, until the next run, until the next go around, which is why we work so hard on yield. Yeah. Because we know we can't build a long-term business just of a balance sheet. We can't just wait and hope. We're not living in a home and hoping someone's going to afford to buy our home. We're going to keep building on the balance sheet, which is what we'll talk about in part 2 of this call today. So that's the big stuff. On the peripherals, you've got headlines coming out all the time. I have to be very selective these days about which one to put into this call, because I could talk all day, frankly. But you've got $10 billion GameStop. The CEO there tells CNBC 500 million of Bitcoin is going into their buy so they can hedge against inflation. So I don't know if you can bear it, but sometimes we do have to listen to the talking heads, the BBC, CNBC, etc., because we just need a sense check of where they're coming from. And we've done that over the past 12 months and more, obviously. But certainly this last 3 or 4 months, it's been palpable how the talking heads have changed. All that tells you is that the media, the editors, the people who report the news, the people we see, which are the reporters on the actual screen, they really don't know what they're doing. Yeah, the media don't know what they're doing to such a degree that they'll be given a script to talk about, which is why we have a big suspicion that the media is being manipulated by the governments, etc. Right? And when you see the language shift go on, you really see they don't know what they're doing. Right? And that just tells you all you need to know about where you get your information from. Unfortunately, the vast majority of the population get the information from the mainstream media, right? So you end up with this dumbing down, which is why, we've been so successful, certainly since COVID, because there's so many people out there who want a more sophisticated picture about what's going on. Yeah. And then you just add to that all the structures we'll touch on in part 2, and you realize, this is something for everybody, and it's not a difficult thing to do as long as you keep up with it and you've got the support around you. All right. So the likes of GameStop are well on board. Mike Saylor, okay, setting all new time highs, left, right, and center all the time. Their market cap just went over 127 billion last week. So that's just keep going and going and going. There's no question that Strategy as a company will be up there with your Apples, etc., in coming periods of time. No question about it, because they've just been able to absorb the nucleus of the monetary energy. They're by far the biggest owner of Bitcoin, up there with Satoshi himself, right? So it's very, very interesting to keep an eye on Mike Saylor, which is why we talk quite a lot in the academy these days about owning Misty and all the different products that sit around the master strategy. And then we're already learning how to yield from that at our target, which is 5% a month. So I'll work with your coaches on that, and I'll see you in the workspaces. Adam Back, one of the original G's, he's now developed a treasury company, okay, BSTR, 30,000 Bitcoins worth 3.5 billion raised, and another 1.5 billion last week, I believe. So there's some interesting things going on about what Adam Black's up to, but it's all to do, again, with this standoff between traditional finance and DeFi. And again, all it's meaning, as you can see, is just more and more liquidity, which is all we need, right, for the small amounts that we manage. Page 2 of macro, just a little bit more detail with regards to what's going on. Total market cap of Bitcoin and crypto surpassed 4 trillion for the first time in history last week. Yeah, 4 trillion. Now, if you understand how small that is in the grand scope of the trillions, 191 trillion, whatever the number is, that all humans own, stuff that humans own, from art to land to property, yeah, companies, stock market, gold, Bitcoin, you realize it's such a tiny, tiny amount. In fact, when you also realize, unless you already do, that gold represents about 22 trillion of stuff that humans own, you realize how early we are. And none of those things, be it gold, property, stocks in companies, derivatives, all the banks, none of it is more valuable than sound money, than monetary energy. None of it. And all those elements will move into some sort of ownership of sound money. Yeah? When you look at it like that, you realize how blessed we are to live at the time we live, and even more blessed we are to be having this conversation in 2025. You've got to keep yourself up at that level, yeah, in order to make sure you've got the energy to continue what it takes to build your part in that. Yeah? So it's all about how much money is coming into the system relative to the starting cap of Bitcoin. These are the charts we're now tracking, right? We started this particular bull run. Doesn't always feel like it when you're living in the weeks and the months and the moments that you do when you focus on this full time, because you do get these pullbacks, these winters, as they call it. But in actual fact, if you look at it on the round, in the full, really zoom out, we've been in a bull run since $16,000 Bitcoin. Right? And we're learning how to appreciate that as well, because it can be a bit, cut and thrust, especially when you're looking to reallocate and drive cash flow into your business and not just sat back treating Bitcoin as a property, waiting for it to appreciate. We need life giving cash flow, don't we? We need to live life. Yeah. So the maths are pretty straightforward. If we had 100 billion come in from all these other areas of where money lives in the world at the moment, yeah, then we drive towards where we are today. If we had another 100 billion, we get to 200K. Another 400 billion, we get to 444, which is a number that people cast around the place, 444,000. In other words, all people are saying is, as I touched on in the prior slide, that as we see liquidity seep inwards now, because of all the confidence that is being given to it through US policy in particular, then it's inevitable that more and more and more billions are coming in, yeah, to what is already a $4 trillion industry. So it's just a tailwind. It goes back to that chart what I showed you earlier, where you can see the line, it moves across, and we're now at 123, and soon we'll be at 200, then we'll kick on to 500, yeah? All you've got to do, which is what we'll talk about in part 2, is understand how to manage that CAGR and keep reallocating equity back into yield in a way that hits your lifestyle, basically, yeah? That's what we specialize in at DBM. So the bigger picture is, we ask this question a lot these days, is the Bitcoin 4-year cycle dead? We've lived off nothing else but the 4-year cycle since 2012. Yeah, we've had no other choice because it's been very speculative back then, yeah, all the way through up to 2016. 17, we saw the big run, and it pulled back aggressively all the way up to 2021, and it boomed massively, yeah, and we've been in that ever since. So the whole idea is, well, what was driving that 4-year cycle? Well, obviously, it's the halving. So I don't know what the answer is to that question, right? But the research is telling us that the halving cycles may no longer be driving the price. Let's say as much as they did. We've now got much bigger factors like inflation, global tensions, institutional demand, etc. So we're thinking the next bull run might play by different rules. Now we can't sit back and rely on that, obviously, because we just don't know. But we work on probables. We always work on probables, highest probables. So as long as we're accruing, which is what we call DCA, anybody that's been doing that, and I've said for years, just own one Bitcoin, yeah? These days, it's own 0.1 Bitcoin. If you own 0.1 Bitcoin, you can very easily set yourself up for life. And I'll show you in part 2 how you can create $1,000 a month positive cash flow very easily with 0.1 Bitcoin. All things being equal with where we expect this next trajectory to go. Yeah? It's not going to be a stamp. It's not going to be like a money machine you turn. You're going to have to manage it, which is why we have the academy. Now, the other crucial part to this next phase is how much Bitcoin is being drained off the OTC and exchange desks, right? They're dropping very quickly, which we knew about some time ago, because we've got these big companies now basically copying the strategy, yeah? So lots of institutions still to come in, lots of companies still to come in, yeah? The miners and the whales aren't going to offload, right? They're busy enough. They need to keep hold of their Bitcoin, and they're doing it more aggressively now because they know they don't need to sell Bitcoin in order to create the yield, right? As we do. So supply is tightening incredibly quickly, yeah? Which means that we think that the traditional 4-year cycle may be over, which is a good thing, because it means we're going to get these steady growths rather than these big peaks and long troughs and big peaks and long troughs. It's always been upwards, but it's hard to run your business when, you know, you've got these big movements, which I think has now come to an end. But we'll see, won't we? We'll see. And then you've got companies like Schwab, which just add more fuel to the fire. $10 trillion Schwab just announced live on BBC last week again that will enable the purchasing and selling of Bitcoin through their channels, okay, which is just another example of what I'm talking about. And then just small but no less important, what we've seen just this past week as well, maybe past couple of weeks, has been the BTC dominance drop to its lowest level since 2021. Now, what does that mean? Well, it basically means that if there are $4 trillion total market cap that exists in the entire digital industry, so Bitcoin obviously is the majority of that, still touching around 60%, I think, top of my head. The balance, the 40%, is the rest of the altcoins, the rest of the crypto industry. And it's that 60% that's dropping to 58, to 57, to 56, to 55. And it's dropping, right, for the first time in a big way in this last couple of weeks since 2021. Now, for us, again, it doesn't really matter because our premise has always been to own the top 10 coins on CoinMarketCap, for example. You might not always dollar cost average in. You might always find sometimes you need to smash the jar and move it into sort of that's beside the point. The point still stands that the strategy is to own as many of the top 10 coins as you possibly can based on your own decisions, right? We always advocate Bitcoin 100%, but the rest is entirely up to you. And what you'll find is going to happen now is that the altcoin season, as they call it, will come back in again because the dominance is dropping, and a lot of that's going to be fueled by what I've been talking about for the past 15 minutes. But most of all, the retail people will come into that space. There's a lot of degens in retail, right? We've all been there. A lot of people who take quick and fast risk because they want quick and fast results. They're not the big institutions, they're not the professionals, they're not the big trader guys, they're not the whales, they're not the people who, you know, fully understand finance. The people who just come in and are willing to, they're more comfortable doing the lottery and betting on the next horse than they are building a professional business. Let's put it that way, right? Which is why most people will just go into the institutional end of what sound money now represents. They'll pay the fees, they'll have full custody with somebody else, they won't be thinking on their own, they won't be taking responsibility, they won't want sovereignty, they won't want education, God forbid. A lot of retail people are going to come chasing the next round of the altcoin season. Now, that's going to bring huge volume in again. In the first instance, that will hit the alts. But our job is to recognize that you get pumps and dumps and it goes crazy right? And you've got to know when to get in and when to get out and then move the profit, the equity across to your core balance sheet. So we'll keep an eye on that as best we can. We're doing some work at the moment with some people to figure out where those entry points and exit points are, but it's a very difficult thing. So if you just want to stay stable, just stick with Bitcoin. But we will be looking at some of the alts for sure in this next quarter or two. Okay, so to wrap it up, we've got the geopolitics side as well, right? There's a lot of crossover now, as you notice there, even in the macro level with the geopolitical level, which is interesting, right? It used to be very distinct, two separate things, but now they've crossed over very much because of what's going on in the US and because it seems we have a president in place at the moment who is a businessman as opposed to a full-time politician, an accountant, or a lawyer, right? He's a businessman. So he totally understands finance and he knows his whole legacy will be built off the back of how the stock market performs and the performance of the monetary markets while he's in power. That's all he's interested in. Whether you like that or not, that's just the way it is. Now, when a president of the United States goes onto social media, as he did in the last 24 hours, and posts a video called The Greatest Bitcoin Explanation of All Time, then you know we're in a different realm. We're in a different universe than we were even a year ago, right? We're not going to rest back our businesses off the back of a president who has this demeanor, but it just gives us more reason to know we're on the right track. Let's put it that way. Yeah. And it's very interesting. So we'll see. Because to exemplify the other side, you've got a situation before this particular president and party was in power, apparently, allegedly, we're still figuring out whether this is the case or not, but it's looking like it is, that the US government sold the vast majority of the 180,000 Bitcoin that they held some time ago, right? Yet the price still went ballistic, which is an important point to understand. But at the same time, they just keep making the same mistakes. We've spoke about sovereign wealth funds many times on these calls, yeah? And we know what Norway and the UAE and other countries have done, and Saudi Arabia, to redistribute some of that long, cautious, steady growth, whether it be oil, gold, etc., and now Bitcoin. But what are these people doing? And then to compound that, just in the same week, we get hearsay that the decision makers in the UK are looking to cover near-term shortfalls, just like they did with oil back in the 80s, just like they did with gold back in the 90s. They're just about to do it again by selling the farm to cover short-term failure of government's ability to manage countries' finances. Now, back in the day, we'd have been so annoyed about that, right? If you'd have noticed it, many people didn't even notice the oil was sold. They didn't even notice the gold was sold. And they're certainly not going to notice the Bitcoin's about to be sold, right? Back in the day, now we do understand it. It's very, very annoying. But now, because we are our own bank and we own the center of the money supply independently of anybody else because of this invention called Bitcoin, it's less aggravating. But it's still a situation where these people are either ignorant or complicit, and I'm still not sure which they are, and I'm still not sure which is worst. But the damage these people do to near term due to mismanagement, medium term due to the ability to manage funds on behalf of the populace, the taxation, and long term because of their incessant money printing, one day will be looked back on as one of the most ridiculous episodes of human history and put a lot of people into destitution and despondency for no reason. And you've got people still who are behaving in this way in 2025, despite the obvious presence of sound money. You've got to question it, right? But what do you do? What do people do? Do they vote for this one, the blue one or the red one? Are they any different than each other? So it's annoying, but it is what it is. Okay? But the clever thing is that it's not affecting the overall business of what we do. In fact, it's helping things along as more and more people decide to stand up on their own feet and vote with their feet. US House passes the advance of the Genius and the Clarity Acts, as we said. Okay, so major crypto regulations are moving one step closer. In other words, the door's wide open now. But there is detail. There is detail that needs to be understood. Interestingly, French lawmakers, fair dues to them. Okay, they have proposed, again, right? But they proposed also to put Bitcoin on the balance sheet and set up a strategic reserve in France just a few weeks ago, and it got kiboshed, right? Because they're in Europe. But the lawmakers have brought in a proposal to use surplus energy that exists in a very sophisticated electricity grid in France. It owns half of the UK's electricity grid for Bitcoin mining. So people get it. People are getting it. Slowly but surely, people are getting it. And eventually, you'll just get a critical mass that builds up where they'll overcome the laggard of Europe. And they'll start to have a bigger and bigger and bigger and bigger voice. But the damage being done in the meantime is atrocious to observe. But as I say, as long as we're building our own households, then we have some level of defense against it. All right. Genius Acts, it boosts demand for US treasuries. That's a fundamental to understand as well. Yeah, they're not doing this for the good of the health. Right. They fundamentally in the US want the world to continue to buy US treasuries because then they know the dollar remains the hegemony. They want dominance. You'll hear Trump talk about that all the time. They just want dominance. They're not interested if it helps people or doesn't help people. They just want to stay in control, right? And if part of that's going to be done through digital rails, etc., then so be it. But as I said last week, the small print is interesting. When you look at the standoff between the US model, which is stablecoin digital rails, and the European model, which is centralized central bank digital currencies on traditional rails, they're not too dissimilar, actually. Right? But in the grand scheme of things, does it matter in our business model? Not really, because it's bringing in the required liquidity for us to get ahead as we own the center of the money supply for the first time in human history. And we don't create the money supply, we own it. We own a piece of it. That's the most important thing to understand, right? So the bosses, the banks and governments, the politics and everything else, they might look as if they're making these changes for the benefit of the population. And we look at the Europeans now bringing in this centralized savings system. I mean, if you've got pensions and you're held up in the European Union, you want to be very careful of this next few months because they are basically in the back door installing the ability for institutions that hold your euros to put into one big centralized savings pot. And they're going to use that to forward the agenda of the European Union, which is weapons-based, ecological-based, environment-based, yeah, and their own self-interest. Right? So you need to be away from it as much as you possibly can, which is where we own the underlying balance sheet value of Bitcoin because it's not owned by anybody. We all own a little piece of everybody's energy. So as long as we keep an eye on that, we're all right. Okay? Another example, Trump very likely to open the $9 trillion US retirement fund and bring that into Bitcoin and crypto investments. That's just more liquidity. It's very likely to do that. There's no reason why they wouldn't do that. Yeah? And all it does, again, is bring more power into the price of what we own as individuals. Thailand are doing the same. Crypto sandbox, as they call it, allowing foreign tourists to use crypto inside their economy. And if you're keeping a track of what we're doing over there with the Forex side of Thailand, etc., then you'll realize why that's significant. And it's just important to catch the lead, to front run it. So it's all happening. Once they do it, lots of other people in the Southeast Asia will do the same. And then last but not least, Tether, of course, the biggest stablecoin in the planet, they're not going to roll over and just assume everything's all right now they've got the Stablecoin Act. They're going to take on the Vanguards and the BlackRocks, which is exactly what they're doing. So they've made a move on the US markets, planning to bring USDT to the US under the Genius Act and bring new US-based stablecoins, right? So remember, they're not a regulated, in that sense, original bank. They're the new kid on the block. And it wasn't written in to the Stablecoin Act specifically that these new kids on the block can create the funds, right? They're going to have to just do stable coins, but they can't go out there and create tools in the way that we know in traditional banking. Now, again, does that matter to us? No, because we go and use those stable coins in ways that most people haven't even imagined yet, as I'll talk about in part 2. So it doesn't really matter to us as in our micro businesses, but it does matter to the bigger economy. So all we're doing is sat back enjoying the show, right? Knowing that as and when, and it will be a when, that the Coinbases and the Tethers and these big institutions get their, equality, let's call it, then it's just going to create an even bigger buzz that puts us on the front foot even more than we already are. All right? So lots to think about there, as ever. As a reminder, if that's a lot to take in, which it is, then just sit back and absorb into the process, work with other people who know what they're doing, have what you want and can prove it, and are moving forward with this and have been now for many, many, many years. And we stay so far in front of it that we're now front running it for fun. Right? We just observe and move, observe, move, observe, move. We're not catching up. We're not keeping up. We're not holding on to other people's coattails. We're on front all the time of every single step that's being done on geopolitical and macroeconomics. Very, very important to understand that. I'll go cover that in more detail in part 2. So hopefully that was useful. Look out for this on the various channels. If you're listening to this on YouTube, hit the bell, hit the like. We're bumping back up to those subscriptions again, and you'll get a synopsis of this whole session over on our podcast. So look out for the channels for that, and we'll see you on the next call.